Guys, good morning. So please hang on with me and bear with me because I haven't really done this sharing of the screen from my click meeting onto YouTube, but that's gonna be a first. It has to be a first every time. Now, a uh, a little bit of a video that I wanted to do that because I think there's some interesting developments that we see happening in the crypto markets, and I wanted to talk to you about that because I've been putting this video for a long, long, long time. I mean, I've been putting it off because I thought that would not be the moment, but more and more I can see that there's something going on in the crypto market as you've seen. We've been through like a massive, massive bull market in the past few months, but we're seeing some interesting development happening right now. And for those of you of who are my students, we've been definitely spending some time on exploring the crypto markets. Some of you didn't know anything about it. Some of you are more advanced, but nevertheless, if I can summarize what happened really in the past few months, and certainly in 2020, is basically the immense jump ahead that we've provided to the cryptocurrency world. And a lot of people see the cryptocurrency as being the Bitcoin. I mean, obviously, the Bitcoin is the oldest crypto out there. It is the most liquid, it is the largest market cap. It is the one that basically provides liquidity and the sort of like life longevity that the institutional players, the insurance, the hedge funds, the mutual funds, I mean, all sorts of basically money management companies that will go into um, these sort of markets, and that will provide for sure the platform for development. And but obviously, Bitcoin is only one out of like 9,000 and plus cryptos out there, and but it has attracted a lot of people for sure. It has and it will keep on attract a lot more people. And I think like 2020 was a big jump in the institutionalization of the product. We came from a product and from a project that used to be like almost like a very closed club, to open to only a few people, only a few connoisseurs, and people that that were interested in the field, people that developers that knew what they were talking about, to and something like a product like Bitcoin being a mode of payments and transaction that could be open in the general economy at large. And I think we moved to see the market 11, 12 years later from the creation of of Bitcoin in 2008, 9, let's say 2009, to an institutional product. Now we've got all the big banks, the major banks, the Morgan Stanley, the JP Morgan, the all the major financial institutions in the States and not in the States that are starting basically talking about the cryptocurrencies as a separate asset class, as something that you should have in your portfolio. Morgan Stanley Asset Management just recently as well started proposing several products, structured products and non-structured products, to their customers, and indicating that it would be a good thing to add that to their portfolios. So, and we've seen a lot of very big names coming on the stage in 2020. From the corporate side, we've seen microsystems, we've seen Tesla, we've seen some corporates that decided to go big time and start, spending money and into their treasury, keeping bitcoins. Tesla, I think, if I remember well, went and to the extent of $500 million worth of treasury of capital, invested into Bitcoin. Microsystem, also being a company, has invested loads of money, and many different names out there like that. We've seen major names from the financial world like Paul Tudor Jones, Stanley Druckenmiller, um, just to name a few, really basically making a big step. Brevin Howard, Alan Howard from Brevin Howard just recently, like a few days, announced that they're going to start using the main capital of the funds to invest into the cryptocurrency world. So, and a lot of other names like PayPal, Mastercard, these are also started like saying that they will facilitate payments into cryptocurrency. So not only now we start having like this step into this era where Bitcoin and other cryptocurrencies are going to be used for main transactions, but we've got a large part of institutional world has started dedicating hundreds and hundreds of millions, if not billions of dollars going into the cryptocurrency world and making it like almost, I would say kosher, legal, making it basically something that will be important for the future of active money management. So I think that 2020 was this massive year that kind of like basically became, you know, the important step for the cryptocurrency world that basically started lending a lot more um, importance, a lot more, how would you say that? Kind of basically, lending it the credibility that everyone was kind of like expecting or waiting for. So from say end of last year, and I'm gonna basically start sharing one of my screen. Right. So this is a as you can see, like on the right end, you've got basically what I call the top dogs. The major caps in the cryptocurrency world. So it's a big red day today, and it follows up, also some of the previous days. But what I want to show is that I'm going to stick on Bitcoin and maybe Ethereum and some of the biggest coins out there in the major caps. So if you want to basically have an idea of looking at major caps, there's very useful websites for that. You can go to CoinMarketCap, which is, I believe, owned by Binance, which is probably the largest platform, and you can get an idea of what we're talking about in terms of basically monthly volume rankings. You can see the biggest coins are the one that have been the most active in the past. You can also have different rankings in terms of cryptocurrencies. You can have market cap, so you can see that obviously Bitcoin, Ethereum, and Binance are the biggest coins out there with almost like $1 trillion, or $900 billion for Bitcoin, Ethereum being 250 billion, and below that, BNB. Not even like maybe 6 months ago, BNB coin was around the $20-$30. Now it's trading, and it was trading almost like $600 a few days ago. So this has been a massive, amazing journey for the crypto world, and especially these most of the coins out there, but the Bitcoin, and we're going to try to look at that. This We had a recent high around the $65,000 on the Bitcoin, and I must say that I've been participating into that rally. Some are more like long-term positions. Some are kind of like, I would say, part of my day-to-day trading. So it's a mix of both, really. But I must say that for the past few weeks, I was feeling a little bit insecure, in the sense that I felt we were going into. I mean, first we've had like a tremendous rally in the Bitcoin. Second, I felt that there is too much press. There is too much noise about it. When you start listening to people around, people that no idea about investing in general, people that don't even invest in general. When you start hearing the plumber, the guy at the bakery shop, and everyone talking about Bitcoin, I start basically raising the alarm, and I start basically being a lot more careful, because usually, not in Bitcoin, I mean in every single investments or every single markets out there, you will notice that when you start having these signs out there, it's usually the sign of a top of the market. Again, I'm not saying that, and I don't have a crystal ball. Uh, I'm not going to say that, this market is going to collapse suddenly, from where it is. But but what I'm saying is that it is a it is important to understand that we've come a long way, and because we've come a long way, we've attracted a lot of people. And last year, that was 2020. We've had like this huge move. With our students, we definitely were ready for the move already from like 11, $12,000, and you know some of the students are still long on that. But you need to basically be keeping an eye on the overall trend. And obviously, until basically very recently, the trend was very healthy, and very positive. But I've started seeing some signs in the past few weeks that I kind of like didn't like. Again, the first sign being that when you start seeing the major headlines on every single social media or media out there, when you start hearing all these people that are usually not involved in investments talking about that, then that's when you got to start getting worried, because that usually these are the latest little guys that will come in the market close to the top, whereas most of these big investors and the big institutional investors, they started coming in 2020, and a lot of them, from say in this area, this has been a big base where you've had a lot of institutional coming in around 11, 12, 13, $14,000, and they start basically building up as well, going into a lot of guys basically probably came in between, like, I would say, $10 to $20,000, and then some other guys started basically using this base around 30,000, between 30 to 40,000. But I would say that a lot of the serious guys, a lot of, like, guys that I really respect in the fund management industry, they came in with a much lower price that we are right now. And I believe that we're seeing a lot of the smaller hands, weaker hands in the market coming in the past few weeks, buying to what I consider, to be probably close to the top. And what can also ring the second alarm is the fact that we have um, also come from a market which was trading on the spot. So that means, right now you can trade spot or you can trade derivatives, futures. In the case of spot, that means that most of the times, and most of the platforms out there where you can trade crypto will give you some kind of leverage sometimes, but the leverage will be limited. But at the end of the day, most of the spot trading will be, I have $1,000, I can invest up to $1,000 worth of Bitcoin or Ethereum, whatever the cryptocurrency is. Um, the derivatives market on the other end, the futures markets, and again, there's different futures markets out there. There's like the official, I mean, let's say the official one that are trading on the Chicago Mercantile Exchange, the CME, largest futures and options exchange in the world. And you've got basically, a set contract with set parameters and criteria attached to this contract, trading on the exchange itself. Then you've got all the big platforms like Binance and others, and I can't remember if Coinbase still offers a futures contract, but for sure, some these platforms have created their own sort of futures contract called the perpetual contracts. These guys selling this contract, which comes with a high leverage that can basically be up to 100 times. So if I've got $1, I can invest for $100 worth of it. So you can imagine that this sort of leverage that comes in can be very, very dangerous. But lately, according to, and I've posted something on my Twitter channel this morning. Please have a look at it. My Twitter channel is is Holly Ogberg. You can find me. That's so I've posted something interesting about the latest report from Kraken, which is also another major platform in cryptocurrencies, saying that now the the derivatives futures trading is almost like three times as much as the trading on the spot. So that means that there's a lot of volume going out there. There's a lot of people that don't necessarily have the money and to deal with these sort of like big moves, big volatility. You have to realize that the overall stock market, let's say the S&P 500, has an annual volatility of about say 15%, give or take. Um, the average volatility of the Bitcoin. I'm not talking about like other coins that are even more volatile, more volatile, but the average volatility of the Bitcoin is around 50 to 60% annual. So we're talking about like very different animals, very different basically type of volatility. And therefore, when you have like a lot of like small players that don't necessarily have, the means, the financial means to play, but they will take advantage of this massive leverage that's being offered by most of the platform out there, you know that means that they're going to play much too bigger size and too big for them for their own sake and for their own accounts. In the recent days, on the big wash up that we've seen on Sunday in the crypto market, especially in Ethereum and the Bitcoin, we had more than a million accounts that got liquidated on all of the big platforms in the futures. Means that more than a million players out there that had trading accounts didn't have the money to basically hold on the position and had to be liquidated by the platforms. Um, we had almost $10 billion plus of futures contracts that were closed, and I want to show you this chart that I've posted as well on my Twitter. This shows basically the total liquidation on a daily basis, and you see like that was on Sunday, where we had a massive amount of, like I said, almost uh, $10 billion worth of liquidations on futures contract, long position. That means that these were people that were long, and these were people that had long positions and that had to liquidate the position, get out of the position. I mean, whether they made money or not, we don't know for sure, but the fact is that what this indicates the number of people that are levered, that are basically using leverage, that are and sometimes 10 times, sometimes 20 times, sometimes 50 times, but for sure leverage is can become a very bad thing. It can become your worst enemy if you don't know how to control it, if you don't know how to control your risk. And I see that firsthand many times. So what I want to show and what I wanted to share, I know that I went on and maybe too long, and I'm going to basically try to cut it now short. But I've also basically shared that thing. And a lot of people might not really understand what I do and why I do this thing and why I post this thing on my Twitter channel. But the important thing is that these are numbers that should be followed by everyone who's serious about the trading in cryptocurrencies, especially the bitcoins and all the coins in general. This chart shows basically the aggregate open interest of Bitcoin futures. So if basically if you want to understand what's open interest, that means that for every buyer and seller, there will be a creation of a contract, and this contract will represent one in the open interest of these Bitcoin futures. For every buyer, there will be a matched seller, but this basically shows you to some extent the 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 involvement of the futures compared to the position, the nominal position that's out there. So if you look at, for instance, around 22nd of February, which was kind of like a top of a recent top that we had before some kind of consolidation in the Bitcoin, and that by the way, this looks at Bitcoin futures. You can find that for almost like every single big currency out there as well. But for this, on 22nd of February, you had a total open position worth $19 billion at that time. Then we had a consolidation. The position basically lost like lost, basically got reduced by $4 billion. That means that there was like $4 billion worth of liquidations in the markets before we start basically stabilizing around $15 billion. And then the market basically started going up again. I'm going to show you on the price so that you can realize, and I'm going to turn to the daily now because it's you know you can understand a bit better. But like I said, here I was showing you this chart, 20 around 22nd of February until the 1st of March. And now I'm going to show you the price. What happened? That was 21st of February this year, where we kind of like basically got almost to $58,000. And then the price corrected all the way to that area, which was a big area of support around the $43,000. Okay, this is basically box that you can see that I draw. I'm not going to go into the big details, but these are basically based on some of my indicators, etc. And they give me the big areas of support where you should expect the market to start reacting. Okay, so on that correction from say end of February till beginning of March, we had about 27% of correction. At the same time, what we saw was obviously we had the price correction, but we had a correction in the open interest, so the open number of positions by the extent of $4 billion. $4 billion of contracts that got basically liquidated. And as we can see, it goes with the price basically falling down. Again, going back, from the beginning of March to almost mid-March, we had another creation of addition of $8 billion to the open position of the Bitcoin futures. These Bitcoin futures, by the way, takes the major exchange out there, that are out there. So it's not one exchange; it's basically a combination of the massive exchange that are out there. And again, if we look from beginning of March, like we've seen, the market basically managed to go all the way to 62,000. So that was a big increase from the low to the high at that level of about 43, 44%. In that move, in that up move for the Bitcoin from when we went from 43,000 to almost 62, 63,000, we added almost, like we said, $8 billion to the open interest. That means like equivalent of $8 billion of nominal position in Bitcoin that came on. And by the way, this only looks at the futures contracts. I think that basically we have a whole side of the spot market, the spot market that, which deals also in billions of dollars, like I was showing you before. Here, for instance, on Coin Market Cap, when we see the the market cap and the volume, for instance, um, it shows, for instance, that Bitcoin has traded $90 billion so far in the past basically 24 hours. This number, I don't know what. To be honest with you, read more. Let's have a look at it because I'm not sure whether the um, they take the spot only or they take the. That's the spot trading volume. Okay, so that's interesting because see, I wasn't sure until basically I jumped on that call with you now. Um, so that's the spot. So traded $90 billion in a spot. So you can imagine that when I'm showing you these sort of like positions here, and the volume we're talking about only the futures market for Bitcoin, but obviously these positions in the futures market are the one with the most leverage. So every time that they add 8 billion, 9 billion, like we've seen, and you can basically go to my Twitter, you'll see that. You'll see the details of that thing, of that analysis. There's another, I don't know how many billions as well that go in the spot trading, in position, in spot trading, and not only futures. So there's a lot of people that basically are positioned in either one or the other. But the interesting thing is basically to see the overall, and I'm going to go to this website also has a very good analysis for the futures. markets. But if you look at that, that's the yellow line represents the price, closing price for Bitcoin, and the rest of basically these colored lines that represent for every single futures exchange the amount of open position. Right now, at the very recent top, when we kind of like got, like I said, around 64, $65,000 in Bitcoin on the 13th of April, the overall position in futures markets was close to $28 billion worth of notional amount. And as we stand right now, on the 23rd of April, this position has melted to $19 billion. If you can see, basically, that's what I'm showing you in the little box that's open. Total, it says total $19 billion with a price of $48,000 on Bitcoin. All right. So what I'm trying to basically say and explain to you is that there's a very relevant analysis of looking at, what's the overall. I mean, obviously, we don't know what's the overall position in spot trading, or maybe there's a way to figure that out. I'm not, I haven't figured that one out yet, and I'm more than happy for you to share your views on that thing. But right now, the the position is pretty clear and transparent on the future side of things. And my analysis, if you go to my Twitter of this morning, is that we had a bunch of people that got in from beginning of April, from the 7th of April, roughly between that sort of price between 56 and almost the top 65,000. This guy got washed up, especially in the big wash up that we seen on Sunday, on the 18th of April. But on that Sunday and on Monday, I can't remember why I tweeted that I felt there was still a lot of like bag holders. That means like long people that I've got long on that market and still carry this long position. And probably a lot of these people that started building their position from the 26th of March on, and that sort of like consolidation base here. So I would say that between 55 and 60,000, there's still a lot of people that were long that did not liquidate. And I think that we're seeing that basically that bunch of people that have liquidated now. If you go back to this chart that I was showing you from that base of the end of at the end of March, okay, so here now that's the base that I'm talking about, okay, that where we moved from almost 50,000 to the recent high of 65,000. We evolved from almost $18.9 billion in open position to what I've just shown you right now, which is current number 19 billion. So I think we got a lot of people out right now, at least on the future side. I don't know about the spot, because I don't have this access to this information. I don't even know if anyone has got access to that information, apart from every single each relevant exchange. But the fact is that we might uh, we might start challenging the guys that are from that base on the end of February, where we were all around 15. The open interest was around 15, $16 billion in that sort of range. Let's call it 15 and a half. Okay. Um, let's call it 15 to make it like a big, a nice round number. Okay. And I'm going to show you, that was basically towards the end of February. And that's on my dailies. That's that sort of area that we talked about, So all this area where from that area where we traded around $44,000 all the way to 50, say 50, $51,000, there's been, a lot of people that came in, okay? A lot of people that came in, and these people are just basically about to get challenged. Why? Because the price has gone right into the area where they became long, or already basically lower than the price where they become long on the Bitcoin. And right now the open position is $19 billion, but we come from a base in consolidation that was about $15 billion. So I think my analysis calls for that there's another $4 billion of futures contracts that potentially will have to puke somewhere, and will have to be liquidated. And I think it's going to basically be come down to the simple fact of one, who are these guys that came in and that in that sort of like area between say 44 to 50 $51,000 in that six that $5,000 to $6,000 range. Who are the people? Who are the players? Were they big institutional players? Were they a lot of basically small retail players like myself and yourself maybe, and people that have been playing the market on the high leverage side of things, or on not so leverage. How these people very leverage, this is going to be the big question mark. And for sure, right now, for me, moving average 100 on the Bitcoin should have landed support, but it did not. But the big break that we saw last night, before I went to bed, and I say, if we break through this $50,000 mark, this is gonna be the big the big moment in the Bitcoin, and we've seen that. And honestly, I'm for those of you who know me, and especially my students, that I'm not the one trying to catch a falling knife. It's not. I wait for my levels to basically be reached. I wait for my areas of support. In the case when I want to buy, and I will wait for that market reaction to see if we can start basically seeing some reaction from the market, from the buyers. So again, this area that we built almost $5 billion worth of in the futures only, and I'm not even talking about the spot. Again, I know I'm repeating myself, but it's important that you understand that there's the futures market, which has become a predominant instruments to trade all these big cryptocurrencies. And at the same time, there's the spot trading people, that will decide to invest $1,000, $2,000, whatever it is, and don't necessarily use leverage. These people, can be mentally, psychologically affected by what's happening in the market. Obviously, because if you bought X amount of money worth of Bitcoin, and your average price, it's say $48,000. Right now, that's where we're trading. Maybe you didn't do anything. Maybe you didn't take any profits. A lot of people are very bad at taking profits and generally basically handling their position. Position management is the number one priority. Like I said to my students many times, you could almost like go with a flip of a coin, decide whether you want to buy or you want to sell cryptocurrencies. As long as basically you've got the proper risk management and the proper position management, you'll be fine. You'll be just fine. But at the moment, we don't know whether these people, they've had the proper position management and they managed to basically take money off the table, or they just basically hope that it would go to the moon. And in that case, right now we've got the current price of the Bitcoin started trading right into where this big amount of $5 billion worth of open position futures have been built up. And I don't know who are these guys. I mean, I know myself. I know that basically, as far as I'm concerned, I've I've been out, and the move that we've seen recently since basically the beginning of the week. I've been out also on my longer position, because for me the fact that we start trading below these levels, below moving average 50 on the daily, is not a good sign. It's basically a sign of me bailing out, and at least basically the intermediate to longer term uh, um, position and trend of the market has changed for the moment. Again, not saying that it's going back to 3,000 or $4,000 like we had sometimes at the beginning of 2020. I'm saying that trend has changed. There's loads of leverage. There's a lot of basically small people, retail, and people that don't necessarily understand, and people that I know for a fact don't handle the risk management. And these people, I don't know, they've already started reacting. I mean, this big washout that we've seen on Sunday and this big washout that we've seen in the past 3 days, it is indicative, as well as with this, this chart that I'm showing you, this one, this big drop from, again, from the high that we've seen, almost $28 billion to 19 right now. We're talking about a drop of $9 billion worth of contracts, but there's still a lot of people, $5 billion worth of it in futures that are invested, and I don't know how they're going to react. And at this stage, I don't see the big hands. I don't see the big volume. I mean, we'll have to basically follow up in the next few days whether we're going to find some big buyers, institutional buyers, the guys with the big bucks, and the guys that also have the nerves or at least the timing to be able to handle that sort of volatility. But for me, the big next levels are going to be here. The low that we've seen in at the end of February around the 44,000 dollars. That's sort of like um, that box I'm going to basically extend here. And I know it's wide, but again, with such a volatile instrument like Bitcoin, you can't basically say that this is going to be the exact price where the market is going to react. You can't have that. But that sort of box here is basically the next area where I feel, for those of you who are totally out like myself, or that have basically been out from the beginning and didn't basically take advantage of that big move that we've seen since 2020, then this is going to be the area where you want to start opening your eyes and probably start waiting for some sort of consolidation, waiting for some signs of the market turning up. That's why we're using certain strategies, at eTraining Academy, because we need to prepare these areas of support, and we need to be ready. Something's going to happen, but definitely that the area of 43,000, 38, 37, 43. $1,000 on the Bitcoin. Also getting very close to the EMA 200. That's going to be the big area I think to watch next. I might be totally wrong. Maybe by the end of the day we'll have basically found some good support on this moving average 100, and we'll see some a lot of short liquidation. But I don't think there's been that many shorts in the market. And even basically, if there's been some shorts for sure, then we'll see. There will be some liquidation of this short that will lend some support, bidding up the market. But I believe that the downside right now of having all these people that are seeing the entry price, the average entry price, being challenged, and with the amount that are at least represented by the futures contracts, and probably the spot as well, that's what I'm a bit afraid of. And that's why I've been posting these things for the past definitely few weeks. Some people have asked me and emailed me directly asking me, they were not exactly sure how to analyze this thing. And that's why I wanted to do this video. I wanted to basically do this video to explain all the different elements that I take into my analysis, and how basically I come up with these sort of like big decisions where to get long, to get short. I mean, I'm not talking about intraday right now. I'm really, intraday is a different animal again. Intraday trading, trading for the day only, or maybe like carrying like a small short term swing trading of 1-2 days. It's different. Now I'm talking about more like position trading that will carry your position for a week, 2 weeks or more. And on the basis of that analysis of open interest, of price analysis, that's my fear at this stage. And my fear is that we're not seeing institutional stepping in big time. We're not seeing. And by the way, I don't know if you guys also have followed that thing as well, but I want to open up this thing as well. Last week on the 15th of April, on the 14th of April, we've had like Coinbase, which is the biggest cryptocurrency platform, American platform, being regulated by the all the U.S. authorities, the American authorities. That basically came with a direct listing. It was not an IPO; it was a direct listing. So that means that basically most of the biggest shareholders and directors and CEO, etc., uh, of Coinbase were selling parts of their holdings to the markets. The high on that day was, uh, was $429, and as we stand right now, at least on the pre-market, it is trading $289. So we're talking about we're talking about maybe a drop of about 30 something percent, where we are, 32% from a brand new stock that just basically been listed. Very smart investors like Kathy Wood from the ARK Invest Management, they've invested almost $600 million worth in that stock, and they've had it, all on the way down. But again, the trend is the trend. Proper disclaimer, I've got I bought yesterday some. I started basically putting in some entries on that thing, um, just to put like a little bit, and to get my attention, because I get my best attention when I've got like skin in the game. So but the fact is, again, we're not seeing the uh, much, buyers or volume, going from the buyers on that stock. And it was supposed to be, the listing of listings. It was supposed to be, so popular and bringing a lot of people. And to be honest, right now I think a lot of people, they kind of like confound the fact of, taking Coinbase as a proxy to trade the Bitcoin. It's not. Believe me that it's not, because it's like, in the gold rush, in the wild west, back in the days, where, was it better to basically be the guy who goes for the mining, and finds the gold, or was it better to basically be the guy who sells all the equipment for these miners? Second option, definitely, by far. Because many guys, they left, all their fortune, and they lost their lives basically trying to dig for some gold that was not existing. Same thing here with Coinbase. Coinbase is a platform that gets 95%, if not more, of their revenues from commissions, trading all sorts of cryptos, not only Bitcoin, but all the cryptos out there. And they've been adding cryptos after cryptos after cryptos. So, and they're the biggest basically platforms in the US, regulated by the US. So this is one way for institutionals to get their feet wet in the cryptocurrency world without owning cryptocurrencies, but still being part of the cryptocurrency economy. And as a matter of fact, all these days where we're seeing huge wash-ups and huge volatility on the cryptocurrencies, the more volatility, the more volume, the more basically these platforms that will make money. The Binance, the Coinbase, the Kraken of this world, that's their business model, and not only business model. So, that's another way of looking at the crypto, if you're not basically part of the move at this stage, and if you're interested in getting involved. All right, guys. So it's been a much longer streaming and video that I wanted to that I was intending to do, but I hope that it will clear up certain things. I think the most important thing that I want you to keep off is basically that, there's a price action. You can analyze the price action. You can analyze the open interest on the futures, which probably represents a very big share of the trading going on out there in the cryptocurrencies. And you have to add one and one in order to basically understand where we are. And at this stage, I believe that, this is going to be a key level. The key level that we had yesterday was definitely the $50,000 level, and right now, we're close to it. Although, we had a low today of about, close to $47,000, but I still believe that there's a lot of long holders, bag holders, and we right now we're attacking their level. We're attacking basically the level at which they entered this market. And I really don't know whether the people that have the patience, whether they took money off the table already, whether we're going to have some buyers stepping in at this stage. But you have to be careful. There's a lot of leverage out there. There's been a lot of like social media and a lot of people that got in that market thinking that it will go to the moon and it will be a one-way street, and it's not. Like in anything, there's always a lot of risk involved. And the most important thing, like I said to you, is not necessarily whether you buy or sell short. The most important thing is basically how you control your risk and how you control the position management, the management of your position, the trade management of what you got on at the moment. All right. So I hope that this was useful to you guys, and I will definitely try to do that a little bit more often. I will try to definitely um, make it shorter, so that everyone can enjoy, shorter videos. But sometimes, I just can't stop myself from talking. All right, guys. So see you very soon on our YouTube channel or Facebook. Please have a look at our Twitter. Subscribe to our Twitter feed or the Facebook feed, and we post a lot of interesting things there. We try not to post too many things, but interesting things. All right. So take care, everyone. Have a great weekend and be safe out there.